What's up, everyone? This is Musa from the Trading Do, and welcome to our very first video and episode on our YouTube channel and Discord. Today, I'll be going over one of the best playbooks I have and the best strategies that I use, which is the Inside Candle model. And it's literally a money printer machine when you know how to use it and you know how to spot it. So, to kick things off, let's start with identifying what is an inside candle. So basically, we have a visualization here. It's a contained pattern where we have a bar or a candle like this, and then the next candle is relatively small regarding the preceding bar or comparing it to the preceding bar, and it doesn't take its high or low. The same thing here. Bullish or a bearish candle here, red one, and a relatively small green candle or bullish candle after it, and it doesn't take its high or low. How can we identify them? Uh, just using the visual identification I just explained is enough. And just focus, and that's a very important point. The next candle after the first one, so the pattern consists of two candles. The second candle has to be relatively small in comparison with the preceding one. The inside candle itself can mean lots of things. Some look at the inside candle from a perspective of market indecision, but we don't really care about this part. What we care is using it in continuation and also using it in reversals. And we know how to use both. And whenever you see an inside candle, it will be a consolidation on the lower time frame. And what does a consolidation after expansion mean? It means we're gonna have another expansion, but maybe, most probably, we can get a manipulation above or below before a continuation of our expansion. So when you always see an inside candle, it means a significant move is about to happen in the next day. The overview is we're gonna see how to identify it and how to filter high probability blaze on the inside candle and low probability ones. We will confirm using the purge and time frame alignment steps, then the execution mechanism and how I execute based on the playbook. Regarding the filtering part, as I said before, it has to be smaller in wicks and bodies regarding or in comparison with the preceding one. So the first requirement is we need to spot inside candles along the higher time frame order flow. So if we have a bearish order flow on the higher time frame, we need to spot an inside candle and we're gonna trade it to the downside along the higher time frame order flow. Requirement 2, we wait for the purge of the high or the low of the candle. And then we go to the next step, which is align our time frame. So if we have an inside candle on the weekly time frame, we wait for the purge of its high if we want to trade it to the downside because the higher time frame order flow is bearish. We wait for a purge on the highs and then we go to the 4-hour time frame after being into the weekly, and here's the time frame alignments that I use with this playbook: monthly to daily, weekly to 4-hour, daily to the 1 hour, and 1 hour to the 5 minute. But I don't really trade 1 hour and 5 minute time frame alignment. And then we spot the dealing range, the last dealing range inside our chart, and wait for the purge to go to premium of the dealing range and take a range high or range low, because inside our main dealing range we're gonna have some swing highs, some legs, smaller legs inside the main bigger dealing range. We wait for a high or a low, or in our case, a high because we're bearish now and we got a purge to the upside. We wait for a purge to happen, hitting premium and taking a swing high from the left side of the chart, and then we wait for a signature of reversal. After we get a signature for reversal, which can be a change in the state of delivery or whatever, we wait for an SMT, which is a correlated pair divergence, to happen. And a pair divergence or SMT means if euro makes, for example, a higher high, GU makes a lower high, and if it makes a higher low, GU makes a lower low, and so on. And then after the SMT or the correlated pair divergence happen, we have our requirements and we can enter the trade. We catch the first entry you can get after the SMT happens and the change in delivery occurs, and we place our stop loss at the high that formed the SMT on the pair we're trading, and we target 3R. So let's jump into examples. First one we can see we have Euro AUD and GBP AUD on the right side of the chart. As we can see, the order flow here is bearish. We have lower highs and lower lows. We form a lower high here, and at the same time, if we can see, we form the higher high on GBP AUD, which means we have an SMT. And then we can look at the last weekly candle. We can see a big bearish down close candle, and then a relatively small green candle here that doesn't take a high or the low of the preceding candle. So we mark up the high of the candle and the low, but we really care about the high because we want to trade it to the downside along the bearish overall higher time frame order flow. And then we go to the 4-hour doing our requirement 2, the time frame alignment, and we spot our dealing range for the 4-hour. So we above here we have premium of the range, and we have a high or swing high that formed on the left side of the chart, as I said in requirement 2, and we have the inside bar high here. So what do we do now? We wait. So we need to see price purging this high, taking the buy side liquidity of this range high here, hitting premium, and then we can look for a significant or reversal signatures and trade it to the downside, taking the range low after taking the range high here inside the bigger dealing range. So now price is taking the inside bar high and taking our buy side liquidity from the swing high. And in this case, I can still look into signatures of price reversing because we can reference the dealing range from this high here that I'm moving my cursor around instead of this high, because this high took a preceding swing high here. So price can reference this high to this low as a dealing range. So I will still be open to see signatures here and trading it, even if we don't hit the premium of this whole dealing range, because this can be enough for price, and I'm dynamic when it comes to reading order flow and adapting to price. As we can see here, after taking buy side liquidity, we go into the 15-minute time frame, again doing time frame alignment so we can enter the trade on the 15-minute, and we wait for our SMT to happen, which happens here. And here is a requirement regarding requirement 3 just before the entry, which is the correlated pair divergence. This has to happen in a key time, and right now we can see it's happening during New York at 9 a.m. new 4-hour candle. So we have our SMT, and now I would like to see this bullish imbalance here, the fair value gap here, gets inverted, and then we can enter our trade on Euro AUD. So now price closed below the fair value gap here, and it's probably hit OTE during New York for this range. And I'll place my limit order on this fair value gap using it as inversion level, and place my stop loss on the high that formed the SMT here, and target 3R that aligns with sell side liquidity from Asia for the Asian session. As you can see, we got our trade and TP is hit. On the 4-hour, if we go back, we said we should expect very significant moves when we see an inside candle along the weekly order flow, which was bearish. So now, after purging the buy side liquidity, and now I fixed the dealing range high, taking the high here to the swing low here, we can see we started going down. That's where we took partials or took TP on our trade. We formed a 4-hour fair value gap, and price started kicking back with very impulsive moves on the 4-hour, using imbalances to go down until it went to this low, which is the low of the weekly inside candle. Moving on to another example, which is gold. So this is a daily time frame. We can see we have bearish order flow. Price here taking a range high and displacing to the downside, forming a bearish fair value gap, and then we can see price consolidating around here. And we have bearish order flow. What do we think if we have bearish order flow and price started to consolidate? Do we expect price to reverse from here or go down? It can't reverse just from here. So we wait for price to expand to the downside, and now we have a daily inside candle, because we have this bearish candle and the next one, which is relatively smaller in comparison with the preceding one, forms equal highs. So let's go into 1 hour, do our time frame alignment. So we have this dealing range high, dealing range low. Of course, we're in premium anyway, and we have this bearish fair value gap inside this opposing two candles here. So this is the purge we needed, and now we wait for price to form an SMT. So the purge happened here, but there's no signatures of price reversing happened during this time, which was at 12. So I waited for the next day during London session, key time, and the SMT occurred inside or during key time. So now I'm looking to trade it. We have our SMT or the correlated pair divergence. We inverted this bullish fair value gap, and we created a bearish smaller fair value gap. I'll place my order here, my stop loss at the SMT high, and I'll target 3R, and that aligns with previous day session low here. And as we can see, gold can be iffy. It went to our entry down, then retracement up, and then continuation down late in the day. Moving into the last example, we have Euro USD on the monthly time frame. We have bearish clear order flow. We have a nice point of interest that we still need to go. We formed equal lows because on the daily and the weekly, this is probably a major swing low. We failed to take that low, hitting the fair value gap in this monthly candle, and the next candle we traded up and closed like this. So we have an inside candle because we didn't take this high or this low, and we have also a monthly fair value gap or a monthly imbalance. Going into the daily time frame using time frame alignment, we can spot our last dealing range from the daily, from this high to this low. We have a swing high in premium here. We wait for the swing high to get purged, hitting premium, and we have a very nice close for this candle on the daily time frame. We take previous candles high and we displace to the downside. So I'm not expecting at all for this candle, for this fair value gap, this imbalance here, to push price higher, because I'm in a point of interest in premium inside my playbook play, and I get a signature like this. So going into the 1 hour, we can see the 1 hour started shifting, rejecting swing highs, closing below lows, and we have an opposing candle, prices respecting and forming another opposing candle, price trading up into the opposing candle, and we get our SMT here. And for this trade, it's a swing trade because I'm trading a monthly. So I don't really, in this case, when I'm taking a swing trade, I'm revving up my risk to reward from taking partials or TP at 3R to 5R, or depending on how the chart looks. And I wouldn't focus so much on entering at a key time, because it doesn't matter, I'm not closing my trade in the same day or something. We got our SMT, we have a bearish, clear bearish fair value gap and an order block combo, and that's where I'll place my order. Whereas stop loss at the swing high that formed SMT on the hourly time frame, and I'm targeting 5R that aligns with taking this low here. And as we can see on the left side of the chart, we have this low and this low and this low. They're all low resistance lows, except really for this one. It's not that low resistant because it took major sell side here, but still it will, it should, I don't know for sure, it should deliver to the downside. And as we can see, we got tagged and price took its time, but our TP is finally hit. So that was the last example, and that was all for examples regarding my playbook, the inside candle. I'll be waiting on our Discord for you to try it out, give me your feedback, and for some of you, the hardworking ones, to do their due diligence and backtest this playbook and come up with stats for it. I have the stats for my backtesting and my forward testing and my actual trading on this playbook. But do yours and don't just believe me blindly and use it blindly. And for who will do the work, test it out and come up with stats with data, they will be rewarded in different ways. So that's it for me, and I'll catch you in the next episode.